Based on the historical data and forecast, Bitcoin has shown considerable volatility with a general upward trend over the past 2 weeks. The price has bounced between a support of $107,100 and a resistance of $115,100. The RSI has fluctuated between 34.8 and 47.4, indicating periods of both oversold and overbought conditions. The Bollinger Bands have widened, reflecting increased volatility, with the price frequently touching or crossing the upper and lower bands. Considering the forecast for the next week, which predicts prices hovering around $106,900 to $109,800, a conservative strategy focusing on short-term gains within this range is advisable. Therefore, I recommend a combined strategy utilizing RSI and Bollinger Bands. We will initiate a long position at $107,200, coinciding with the forecast price on October 24, 2025, and the lower Bollinger Band touching $105,200 on October 23, 2025, indicating a potential bounce. The stop loss will be set at $106,400, just below the support level and the lower Bollinger Band, to limit potential losses. The target price will be $109,800, aligning with the forecast's upper range and the center of the Bollinger Bands. This strategy aims to capitalize on the anticipated short-term upward movement while mitigating risk with a well-defined stop loss. Based on the historical data and forecast, Ethereum shows a fluctuating trend with a recent consolidation phase. The RSI values indicate periods of oversold and overbought conditions, suggesting potential for price reversals. The Bollinger Bands show that the price is currently near the lower band, indicating a potential oversold condition. Considering the support price of $3,800 and the forecast for October 24, 2025 Friday, at $3,720, I recommend a long position with an entry price of $3,730. Place a stop-loss order at $3,700 to limit potential losses. The initial target price is set at $3,840, aligning with the forecast for October 26, 2025 Tuesday. If the price continues to rise, consider adjusting the target price towards the resistance level of $4,680. To optimize this strategy, we'll integrate RSI and Bollinger Band signals. When the RSI falls below 20, oversold, initiate a long position. When the RSI reaches 80, overbought, consider taking profits or closing the position. Additionally, if the price touches the lower Bollinger Band, it reinforces the buy signal. Conversely, if the price touches the upper Bollinger Band, it suggests a potential sell signal. Therefore, the most efficient portfolio would be a combination of these three strategies, prioritizing the RSI and Bollinger Band signals for entry and exit points, while considering the support and resistance levels for target prices. This combined approach aims to maximize returns while mitigating risks. Based on the historical data and forecast, BNB shows a fluctuating trend with support at $1,060 and resistance at $1,300. The RSI indicates that the asset is currently within a neutral range, oscillating between 45 and 66. Considering the forecast prices hovering around $1,070 to $1,110, I recommend a cautious but opportunistic strategy. We will implement a combined strategy utilizing RSI and Bollinger Bands. The primary strategy will be to identify potential entry points when the price touches the lower Bollinger Band, suggesting a potential oversold condition. The RSI oversold level is 20 and the overbought level is 80. The entry price will be $1,070, coinciding with the initial forecast price and the lower Bollinger Band. The stop loss will be set just below the support level at $1,050 to mitigate potential losses if the price declines further. The initial target price will be $1,110, aligning with the forecast and a reasonable profit target. If the price reaches $1,110, we will reassess the situation based on the RSI and Bollinger Bands. If the RSI approaches the overbought level of 80 and the price is near the upper Bollinger Band, we will consider taking partial profits and adjusting the stop loss upwards to protect gains. This combined strategy aims to capitalize on short-term price fluctuations while managing risk effectively. Based on the historical data and forecast, XRP has shown a fluctuating trend with support around $2.36 and resistance around $2.85. The RSI values have mostly been below 50, indicating a generally oversold condition, with some periods approaching overbought territory. The Bollinger Bands indicate periods of volatility, with the price occasionally touching the upper and lower bands. Considering these factors, I recommend a strategy combining RSI and Bollinger Bands. We will initiate a long position when the RSI dips below 20 and the price touches the lower Bollinger Band, aiming to capitalize on potential rebounds. The entry price will be $2.23, with a stop-loss set at $2.15 to limit potential losses. The target price will be $2.63, based on the resistance level and a reasonable profit margin. To refine the strategy, we will incorporate the forecast data. The forecast indicates a price range between $2.23 and $2.33 for the next week. Given the oversold conditions and a forecast, I suggest entering a long position on October 27, 2025, at $2.27. A stop-loss will be placed at $2.18, slightly below the lower Bollinger Band, and a target price of $2.45 will be set, aligning with a potential bounce from the support level. This combined strategy leverages both technical indicators and the forecast to maximize potential returns while minimizing risk. Based on the historical data and forecast, Solana shows a downtrend with price fluctuating around the support level of $180. The RSI consistently remains below 50, indicating a prevailing bearish sentiment, with recent values hovering around the oversold territory of 36 to 45. The Bollinger Bands also suggest a period of consolidation, with the price oscillating within a narrowing range. Considering these factors, my recommendation is to implement a short selling strategy. The entry price should be set at $189, with a stop-loss placed at $191 to mitigate potential losses if the price rebounds. The initial target price should be $178, aiming to capitalize on the anticipated downward movement. To refine the strategy, I suggest incorporating a trailing stop-loss mechanism. If the price rises above $187, adjust the stop-loss to $187. If the price continues to climb, further adjust the stop-loss to $189. The second target price should be $177. This approach allows us to secure profits while minimizing risk. This portfolio combines the insights from the RSI, Bollinger Bands, and support/resistance levels to create a robust and adaptive investment strategy. Based on the historical data and forecast, TRON exhibits a downtrend, particularly evident in the recent forecast prices hovering around $0.30. The RSI consistently stays below 50, indicating prevailing bearish momentum. The Bollinger Bands are narrowing, suggesting a period of consolidation before a potential breakout. Given the current conditions, I recommend a short position strategy. Entry price should be $0.302, coinciding with the bottom of the Bollinger Bands and the recent forecast price. A stop-loss should be set at $0.313, just above the support level, to limit potential losses if the price reverses. The initial target price is $0.295, aligning with the forecast price for October 30, 2025. To refine the strategy, we'll incorporate RSI signals. If the RSI falls below 20, indicating an oversold condition, consider covering the short position and waiting for a potential bounce. Conversely, if the RSI reaches 80, signaling an overbought condition, tighten the stop-loss to the center of the Bollinger Bands. This adaptive approach, combining Bollinger Bands and RSI, aims to maximize returns while managing risk effectively. The portfolio will be 60% short TRON, 20% cash, and 20% in other altcoins. Based on the historical data and forecast, Dogecoin exhibits a declining trend with increasing volatility. The RSI consistently remains below 50, indicating a general bearish sentiment, with dips below 30 signaling oversold conditions. The forecast prices for the next week predict a continued downward trajectory, further reinforcing a bearish outlook. Considering the support price of $0.19, we will implement a contrarian strategy focusing on short-term bounces and utilizing the Bollinger Bands for confirmation. Our primary strategy will be to identify potential short-term rallies from oversold conditions, aiming to capitalize on temporary price increases before the overall downtrend resumes. We will initiate a long position when the RSI dips below 20, indicating an oversold condition. Specifically, we will enter a long position at $0.178. The stop loss will be set just below the recent support level at $0.17 to protect against further declines. The target price will be determined by the upper Bollinger Band, which is currently at $0.187. This strategy aims to capture a quick profit from a potential bounce, capitalizing on short-term momentum while acknowledging the prevailing bearish trend. If the price fails to reach the target and falls below the stop loss, we will exit the position to minimize losses. This strategy will be allocated 60% of our capital, while the remaining 40% will be held in cash for future opportunities. Based on the historical data and forecast, Cardano shows a downtrend with a forecast price consistently below $0.6. The RSI consistently remains below 50, indicating a bearish sentiment. Considering the support price of $0.624 and the forecast prices, I recommend a short position strategy. We will enter a short position at $0.642. A stop loss will be placed at $0.662 to limit potential losses if the price unexpectedly rises. The initial target price will be $0.586, based on the forecast data for October 24, 2025. To refine the strategy, we will incorporate the Bollinger Bands. When the price touches the upper band, it signals a potential reversal. If the price reaches $0.662, the stop loss will be moved to the center of the Bollinger Bands, currently at $0.712, to secure partial profits and adjust to changing market conditions. If the price reaches the target price of $0.586, we will consider taking partial profits and setting a new target price based on the subsequent forecast data, potentially around $0.575. This dynamic approach combines the bearish trend, RSI readings, and Bollinger Bands to optimize returns and manage risk. Based on the historical data and forecast, Wrapped Beacon ETH has been fluctuating within a range bounded by a support price of $4,100 and a resistance price of $4,600. The RSI indicates that the asset is currently oversold, hovering around 33.9 to 41.9, suggesting a potential bounce. The Bollinger Bands show that the price has been testing the lower band, further confirming the oversold condition. Considering these factors, I recommend a long position entry at $4,030. A stop loss should be placed slightly below the support level at $4,000 to mitigate potential losses if the price continues to decline. The initial target price should be set at $4,150, aiming to capitalize on the anticipated rebound from the oversold territory. To refine the strategy, we can incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, which has been fluctuating between $50.70 and $51.70, it signals a strong bullish momentum. In that case, we can adjust the target price to $4,280. Conversely, if the price fails to sustain above the center of the Bollinger Bands, which is currently around $4,030, and the RSI remains below 50, it indicates a weak upward trend. In this scenario, we should exit the position and reevaluate the market conditions. This adaptive approach, combining RSI and Bollinger Bands analysis, aims to maximize returns while minimizing risks. Based on the historical data and forecast, Chainlink shows a downtrend. The RSI consistently stays below 50, indicating a bearish momentum. The forecast for the next week projects a continued decline, with prices hovering around $16.0 to $16.9. The support price is consistently at $16.8, acting as a potential floor. Considering these factors, I recommend a short position strategy. Enter a short position at $17.7. Set a stop-loss order at $18.7 to limit potential losses if the price unexpectedly rises. Place a take-profit order at $16.8, near the established support level, to secure profits during the predicted downtrend. To refine this strategy, we'll incorporate Bollinger Bands. When the price touches the lower band, it suggests a potential oversold condition, which could trigger a temporary bounce. However, given the overall downtrend and bearish RSI, this is likely a short-term phenomenon. Therefore, maintain the short position with the previously defined entry, stop loss, and target prices. The forecast price range of $16.0 to $16.9 further supports the short position, aligning with the $16.8 target price. This combined approach, prioritizing the overall trend while acknowledging short-term fluctuations, offers a high probability, high-return investment opportunity. Based on the historical data and forecast, Bonk shows a decreasing trend. The RSI consistently stays below 40, indicating an oversold condition. The Bollinger Bands are narrowing, suggesting decreasing volatility. The forecast predicts a continued downward trend, with prices dropping to $0.0000125. Considering these factors, I recommend a short position strategy. Entry price should be $0.0000149, with a stop loss at $0.0000161, and a target price of $0.0000125. To optimize returns, I propose a portfolio combining three strategies. The primary strategy is the short position as described above. A secondary strategy involves entering long positions when the RSI dips below 20, aiming for a quick profit as it rebounds. A third strategy is to buy when the price touches the support level of $0.0000138, anticipating a bounce. The combined portfolio offers diversification and maximizes profit potential in this volatile market. Based on the historical data and forecast, BNB shows a fluctuating trend with support at $1,060 and resistance at $1,300. The RSI indicates that the asset is currently within a neutral range, oscillating between 45 and 66. Considering the forecast prices hovering around $1,070 to $1,110, I recommend a cautious but opportunistic strategy. We will implement a combined strategy utilizing RSI and Bollinger Bands. The primary strategy will be to identify potential entry points when the price touches the lower Bollinger Band, suggesting a potential oversold condition. The RSI oversold level is 20 and the overbought level is 80. The entry price will be $1,070, coinciding with the initial forecast price and the lower Bollinger Band. The stop loss will be set just below the support level at $1,050 to mitigate potential losses if the price declines further. The initial target price will be $1,110, aligning with the forecast and a reasonable profit target. If the price reaches $1,110, we will reassess the situation based on the RSI and Bollinger Bands. If the RSI approaches the overbought level of 80 and the price is near the upper Bollinger Band, we will consider taking partial profits and adjusting the stop loss upwards to protect gains. This combined strategy aims to capitalize on short-term price fluctuations while managing risk effectively. Based on the historical data and forecast, Artificial Superintelligence Alliance exhibits a strong downtrend. The RSI consistently remains below 20, indicating a severely oversold condition. The forecast for the next week projects a continued decline, with prices potentially reaching $0.12. The support level at $0.236 has been tested multiple times, suggesting it might hold for a short period, but the overall momentum is bearish. Therefore, I recommend a short selling strategy. We will enter a short position at $0.261, placing a stop-loss order at $0.291 to limit potential losses if the price unexpectedly reverses. Our initial target price will be $0.182, capitalizing on the projected downward trend. To refine this strategy, we will incorporate the Bollinger Bands. The price consistently trades below the lower band, reinforcing the bearish outlook. If the price approaches the $0.236 support level and the RSI shows signs of a slight rebound towards 20, we can consider tightening the stop loss to $0.252. However, if the price breaks above $0.291, we should immediately exit the position and reevaluate the market. The ultimate target price, based on the forecast, is $0.12, but we will adjust it based on the price action and RSI readings. This portfolio combines the RSI and Bollinger Band strategies to maximize profit and minimize risk. Based on the historical data and forecast, Solana shows a downtrend with price fluctuating around the support level of $180. The RSI consistently remains below 50, indicating a prevailing bearish sentiment, with recent values hovering around the oversold territory of 36 to 45. The Bollinger Bands also suggest a period of consolidation, with the price oscillating within a narrowing range. Considering these factors, my recommendation is to implement a short selling strategy. The entry price should be set at $189, with a stop loss placed at $191 to mitigate potential losses if the price rebounds. The initial target price should be $178, aiming to capitalize on the anticipated downward movement. To refine the strategy, I suggest incorporating a trailing stop-loss mechanism. If the price rises above $187, adjust the stop-loss to $187. If the price continues to climb, further adjust the stop-loss to $189. The second target price should be $177. This approach allows us to secure profits while minimizing risk. This portfolio combines the insights from the RSI, Bollinger Bands, and support/resistance levels to create a robust and adaptive investment strategy. Based on the historical data and forecast, Raydium shows a downtrend. The RSI consistently remains below 35, indicating an oversold condition, with a low of 25.7 on October 14, 2025. The forecast predicts a continued decline, reaching a low of 1.37 on October 30, 2025. Considering these factors, I propose a contrarian strategy, aiming to capitalize on potential short-term rebounds. We will initiate a long position when the RSI falls below 20. Specifically, when the RSI reaches 19.5, enter a long position at $1.4. Set a stop loss at $1.3 to mitigate potential losses if the downtrend continues. The initial target price will be $1.7, aiming for a quick profit as the price bounces back. To refine the strategy, we'll incorporate the Bollinger Bands. If the price breaks below the lower band, it strengthens the downtrend signal. If the price touches the lower band of $1.37 on October 30, 2025, and the RSI is below 20, we will enter a long position at $1.38. The stop loss remains at $1.3, and the target price is adjusted to $1.7. This combined RSI and Bollinger Bands approach seeks to identify high-probability reversal points. The support price of $1.67 should be considered as a secondary target. This strategy balances risk and reward, capitalizing on short-term volatility while protecting against significant losses. Based on the historical data and forecast, Virtual's protocol shows a decreasing trend with a forecast price ranging from $0.66 to $0.705. The RSI consistently remains below 50, indicating a prevailing downtrend and suggesting potential oversold conditions. The Bollinger Bands show that the price is approaching the lower band, which could indicate a potential buying opportunity. I recommend a contrarian strategy, aiming to capitalize on short-term bounces within the overall downtrend. My recommended strategy is to enter a long position at $0.66. Given the support price of $0.736, I will set a stop loss at $0.655 to limit potential losses. The target price will be $0.736, aligning with the support level and providing a reasonable profit target. This strategy combines the RSI's oversold signal with the Bollinger Band's lower band approach and the support level to maximize potential gains while minimizing risk. This is a high-risk, high-reward strategy suitable for experienced investors. Based on the historical data and forecast, Dogwifhat shows a downtrend with a recent bounce. The RSI consistently remains below 39, indicating an oversold condition and potential for a short-term rebound. The Bollinger Bands are contracting, suggesting decreasing volatility and a potential breakout. Considering the forecast prices are consistently below 0.45, and the support price is 0.49, a conservative strategy is warranted. I recommend a long position entry at $0.434, coinciding with the first forecast price and near the support level. A stop loss should be placed just below the support at $0.48 to limit potential losses if the downtrend resumes. The initial target price is set at $0.54, aligning with a previous resistance level and a reasonable profit target given the current market conditions. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI rises above 30 within the next few days, consider moving the stop loss to break even at $0.434. If the price touches the lower Bollinger Band, it's a strong indication of a potential bounce, reinforcing the long position. If the price reaches $0.54, consider a partial profit taking and adjust the target price to $0.608, aligning with a higher resistance level. This tiered approach allows for flexibility and adaptation to changing market dynamics, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Maple Finance shows a slight upward trend with periods of consolidation. The RSI consistently remains below 50, indicating a generally oversold condition, with values frequently dipping below 40. The Bollinger Bands have been contracting recently, suggesting a period of lower volatility and potential breakout. Given the current oversold RSI readings and the forecast prices hovering around 0.347 to 0.354, I recommend a long position. We will enter a long position at $0.347, placing a stop-loss order at $0.34 to mitigate potential losses if the price declines further. Our target price will be $0.386, aiming to capture a moderate gain while acknowledging the current market conditions. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the lower band of $0.347, which aligns with our entry price, it further confirms the oversold condition. We will hold the position until the price reaches the center of the Bollinger Bands at $0.353, securing a profit of $0.006. This blended approach, combining RSI and Bollinger Bands, provides a more robust and adaptable strategy for Maple Finance, balancing risk and reward effectively. Based on the historical data and forecast, JasmyCoin shows a downtrend with recent price fluctuations. The RSI consistently remains below 50, indicating a bearish sentiment, with values frequently dipping below the oversold level of 20. The Bollinger Bands are narrowing, suggesting a period of consolidation before a potential breakout. The forecast data indicates a continued downward trend. Therefore, a short position strategy is recommended. We will enter a short position at $0.00962. A stop loss should be placed just above the upper Bollinger Band at $0.0136 to protect against a sudden upward surge. The initial target price is set at $0.00843, aligning with the lower Bollinger Band. To optimize returns, we will implement a dynamic trading strategy. If the price reaches the initial target of $0.00843, we will partially close the position and adjust the stop loss to the break-even level around $0.00962. We will then set a new target price at $0.0075. This approach allows us to capitalize on the prevailing downtrend while mitigating risk and securing profits incrementally. This portfolio combines trend analysis, RSI signals, and Bollinger Band dynamics for a high-probability, high-reward investment strategy. Based on the historical data and forecast, World Liberty Financial shows a downtrend with periods of volatility. The RSI consistently hovers below 50, indicating a generally weak momentum. The most recent RSI value of 42.1 suggests a potential short-term recovery, but the overall trend remains bearish. The support price of $0.13 provides a floor, while the resistance at $0.196 caps potential upside. The Bollinger Bands indicate increasing volatility, with the lower band consistently approaching the price. Considering these factors, I recommend a contrarian strategy focusing on short-term opportunities. My proposed strategy is a combination of RSI and Bollinger Bands. I suggest entering a long position at $0.114, coinciding with a forecast price and the lower Bollinger Band touching the price. Set a stop loss at $0.108, just below the recent low of the Bollinger Band, to limit potential losses. Target a price of $0.13, aligning with a support level and a conservative profit target. This strategy aims to capitalize on short-term bounces while managing risk with a tight stop loss. If the price breaks below $0.108, the trade should be closed immediately. If the price reaches $0.13, consider taking profits or moving the stop loss to break even.